Welcome to Minds and Money Online Connect Pitch Battle. And we are here today to see how judges allocate their investment funds amongst companies when they have to make some choices. So what is going to happen today? We're going to have $1 million virtual dollars available for each of the judges to allocate. Now, the judges can allocate all the money to one company, or they can choose to split it up if that's what they think they should be doing. We have 3 contestants today. The 3 companies presenting are Laurel of Perpetua Resources, Bryce Bradley of Thunderstruck Resources, and Denis Miville-Deschenes of Highland Copper. Our judges for this round are George Petker, founder at Versatech Capital for Mining; Roger Bell, Director of Mining Research, Hannam and Partners; David Bellingham, Managing Director of HCF International Advisors; and Nicole, Adshead-Bell, Director of Cupel Advisory. Without further ado, we're going to go into our first one. Each contestant will have 3 minutes to present, followed by 8 minutes for the judges to ask questions to get more information. So, first up today, Laurel Sayer, CEO of Perpetua Resources.
Hello, I'm Laurel Sayer, CEO of Perpetua Resources, and I'm going to share with you why Perpetua represents the superior investment opportunity. Our team is proud to be permitting the Stibnite Gold Project in central Idaho as a modern American mining success story. Our vision is to develop and operate one of the highest grade open pit gold mines in the U.S., provide the country with a critical mineral to power batteries that enable the low carbon energy transition, and restore an abandoned brownfield site. Why should you invest in Perpetua Resources? You want exposure to one of the largest, highest grade and lowest cost gold projects in the U.S. You want diversification in commodity mix and exposure to an asset which can offer the only domestic mine source of antimony. You want to join us in bringing solutions to our industry and creating a new model for mining using mine development to fund restoration and at an abandoned mining brownfield site. Why should you invest in Perpetua now? We are on the downhill side of the permitting process. We received our first permit for our project in June of this year, and we expect the public release of the focused supplemental environmental impact statement for our project in the current quarter. Our stock is trading at a significant discount to our project's net present value, and nearly all of the pre-permitted projects of our peers are trading at multiples of 2 to 4 times where we are trading. And we expect a significant re-rating to occur as we advance through this permitting process. You should invest now because you recognize the strategic value of our asset for its antimony, and you value companies like Perpetua with ESG principles that are foundational to their business plans. The Stibnite project has 4.8 million ounces of gold reserves, 148 million pounds of antimony reserves. Production will average about 300,000 gold ounces over the life of mine, and in the first 6 years of the project, antimony production will average over 35% of annual U.S. demand for the critical mineral. All-in sustaining cost will average less than $650 per ounce over the life of mine, and these low costs drive the superior economics of our project. We have a strategic supply agreement in place with a company called Ambri Incorporated to supply a portion of our antimony to be used in their low-cost liquid metal battery technology. Our project will provide Ambri with the antimony from the only responsible and domestically mined source of the critical mineral in the U.S. So looking forward, Perpetua has some exciting milestones, including we expect the focused supplemental environmental impact statement to be published this quarter, Q3, with a final record of decision expected in 2023. Now is the time to invest in one of the most compelling projects in the U.S., as it is set to unlock significant value for stakeholders. Thank you.
And thank you, Laurel. So to start off the questions from the judges, we have George Petker, founder of Versatech Capital for Mining. Please go ahead.
Yes, Laurel, on your Ambri contract, when are your first deliverables needing to be done as far as, and what kind of tonnage are those early deliverables?
So we have on our contract, we are working with Ambry. The agreement is part of. Well, let me explain a little better. So we're working with them, and this agreement doesn't specifically. We can't share with you exactly with our agreement with them exactly what we are going to be delivering to them. But what I can tell you is that our commitment to them will be to power over 13 gigawatts of battery capacity. So that's about 1 million homes using solar energy over 20 years. And based on that will be based on standard commercial terms, provisions for a fixed pricing and higher values. So as we progress further through the development, but as we mine our project, antimony will be the first mineral that comes off. So hopefully that will be once we're in operation in 2027.
And if I could ask one addition.
We'll come back around,
that's
Mr.
fine.
Petker, as soon as the other judges have had an opportunity to ask some questions as well. Roger Bell, Director of Mining Research at Hannam Partners, you're up.
Thanks, Laurel. What's the actual permitting timeline beyond the approval of the EIS, which you said should come through at the end of next year, just to give us a sense, and sort of how long have you been in this permitting process? Because I can see the feasibility study came out in 2020, so there's some time has passed since then already.
Correct. So we started the permitting process. You wanted to know how long it goes. We started and submitted our plan to the Forest Service in 2016. Right now, we are expecting in this quarter, the supplemental environmental impact statement to come out sometime this quarter, and expecting the Forest Service, hopefully, that they will identify our project proposed action as the preferred alternative. Then in the first quarter of next year, we will have the final EIS and the draft record of decision. And at the end of 2023, we will have the final record of decision. That's the schedule that is put forward.
Thank you. David, Managing Director of ACF International, you're up.
Thanks very much, and thanks very much for that presentation, Laurel. You were saying before that your PNAV is around about 0.1, which is obviously indicates that it's significantly undervalued. What's holding you back in terms of the market cap? Because I note that with the capex, you're probably going to have about $500 million in equity, and that's a long way off. So, what's your equity strategy to build that up as you come towards your construction capital raise and your build?
So we are, of course, right now we are focused on permitting the project, and we do believe once we hit these milestones that it's going to unlock value for our shareholders in the immediate future. As we watch the trends of industry right now, we believe that we are well positioned under a current timeline, and hope that the pressures that we're seeing today will come down by the time we're ready to build. Go ahead, I could see you. Did you want to ask something else? Okay.
Yeah.
And as it progresses through, our plan to build is we will have to raise $1.3 billion, and we believe that we can do much of that because of the project on debt, and raise debt because we'll be able to the short-term payoff period at the beginning of production.
Thank you.
Thank you. And Nikki Adshead-Bell of Cupel Advisory.
Laurel, what's your current cash position, and what's your forecast budget, the cost to get you through to a successful permitting decision, and what is your proposed funding mechanisms if there are additional delays on the permitting side of things?
So right now, our current cash position of the end of that quarter was $36 million. We had a $57 million raise plus last year in August. Our burn rate is about $2 million to 2.2 a month. That will take us through about the third quarter of next year. and our record of decision would be near the end. So right now, as we look forward, we believe that as we hit these permitting milestones, we will increase in value. Our stock price will go up. Right now, we want to make sure we do everything that is in the best interest of our shareholders. So as we progress further, the option may be to raise cash, but we'll think that by that time next year, we will be in a better position with the stock price because we have met some milestones. And we will see a revalue, a re-rate.
So to clarify, based on your forecast expenditure, you run out of cash in Q3 next year?
About that.
Excellent. Well, we have some time to fill in some extra questions. George, I believe you had another question.
Yes, it relates to your Ambri capacity and that of the 13 gig. Do you know what the kg per gig is in use of antimony?
I cannot answer that question. I do not know.
Okay.
But we will get back with you with the answer for that.
Okay, and then in order to get that, you have to have a smelter. And I believe U.S. Antimony is the only one with a smelter in the United States. But their capacity is relatively small compared to your production.
That's correct. And we are working with, as you said, Ambri needs antimony metal. And we're working together with them to assess some existing and potential future antimony refiners to establish who will transform Perpetua's antimony concentrate into antimony metal. So it is in process.
Thank you.
We have a minute left for last questions, David.
One question for me, thanks. What are you spending your cash on over the next year or so?
So what the major uses of them are the permitting process. This NEPA process is expensive, and that's where, so we're using that on our NEPA process to process it through. And we also have done some early actions in an agreement we had with EPA and the Forest Service on some areas up at the project, and with an agreement we called an ASAOC, Administrative Settlement Order on Consent. And we have done some early actions at the site for this year and next year on some water quality up there at the project site.
Thank you.
Excellent. And that about wraps us up for Laurel's presentation. Thank you so much, Laurel Sayer, CEO of Perpetua Resources. We have now, if the judges can once again just black out their screens, that would be wonderful. And next up, we have Bryce Bradley, CEO of Thunderstruck Resources.
Hey. Hi. Okay, I'm just going to start this because I could talk for hours. Yeah, hey, so I'm with Thunderstruck, and essentially, in a nutshell, we've got all of our assets are in Fiji. We've got 4 properties across 4 commodities, which are zinc, copper, gold, and silver. We own them all 100%. Yada yada. Everything is wonderful. They're contiguous to each other. This year, we've decided to focus exclusively on our high-grade Liwa gold-silver deposit, which has never been drilled before. And we've been preparing it now for a few years with soil sampling and trenching, mapping, etc. And have found gold pretty much everywhere we looked, high-grade gold and silver. Coincidentally, we did IP surveys over and coincidentally found anomalous values down to at least 300, 400 meters in the same areas that we had the highest gold and silver. Okay, so that made it very simple for us to delineate our drill targets. Then we have a drill as we speak around 7 kilometers from the first drill pad that just came from Indonesia. We decided to buy our own drill, given the logistical issues of getting things in and out of Fiji. So we have a brand new drill that just got in last week. Our drill team, we've decided to hire a very professional large drilling company called Valentis Drilling. They have also gotten into the country, so they've mobilized the drill. We should be getting to the first drill pad and hopefully start drilling by next week at the latest. Yeah. Oh, I have lots of time. This is great. We are fully funded to the end of the year, and we will probably be doing a financing in October. We are listed on the Toronto Stock Exchange. AWE is the symbol. Go to the website, of course, for more detailed information. Our market cap is exceedingly low given the assets that we have. We're only at like 10 million Canadian dollar market cap. And I just think it's a spectacular opportunity. We have also 3 other amazing assets, which are 2 VMS that have been drilled by us. We are in a project with JOGMEC, the Japanese government. Spent $3.5 million on that. We have a very high grade copper gold porphyry as well that has been drilled. And we think that this might be part of a larger system where they are all part of a bigger system that is unique to Fiji. All we can do is drill and find out. We have a very large and very successful shareholder that is backing us now. So who brings a huge technical team. So that's it. Ask me any questions.
Thank you, Bryce. Thank you. And to get our questions started, we are going to start with Roger. So
Thanks,
Roger
Bryce.
Bell, go ahead.
Yeah, I guess be quite interested in the relationship with JOGMEC and how that came about and what that what funding they've provided to you, and you mentioned that you had actually drilled these VMS assets. So what kind of results did you get from those?
Right. So we met JOGMEC, we spent over a year meeting them at PDAC, and then we met them about 3 times. Finally got a relationship where the terms were not very good for us, but because we're a new company and we just went public and got these assets and got them to be ours by 2016. We did not a very good deal with them, whereby it was like $3.5 million to be spent over 3 years on the first VMS asset that we have called Coracao, and which had been prior drilled by Anglo, so that's why they knew it and loved it. So they came in, they spent the $3.5 million, and we got some great results. We built a full camp, it's still there. 15% zinc over mineable widths. I think it was 20 meters. I'd have to go look now because it was 2 years ago. But because of COVID, they couldn't get into the country. I was in the country the whole time, 1.5 years, but they couldn't get in. And so the contract lapsed and they wanted to extend it. And we did not want to, because the terms were such that, for $3.5 million, they'd get 70%. And that ain't so good. So it was important for us to get our name on the map by doing the deal with them. And we loved working with them. So we've done a handshake agreement. We let it lapse and said that, hopefully when they're allowed to get out of the country, etc., we can revisit it with better terms. We also have they didn't do any work on the other VMS called Nicole. But again, we just had a gentleman's agreement. It was just a verbal gentleman's agreement that if they found what they liked there at Coracao, we could do something at Nicole. So it all good, ended well. For us, I mean.
David.
Thank you, and thanks, Bryce.
Yeah.
I believe you're drilling Lyra Ridge now.
Yep.
Is that epithermal?
So no, yeah. The Liwa, all of Liwa, we think is epithermal,
Okay.
but we won't know exactly until we drill, right? Because we've only done IP and surface sampling. But they believe it's epithermal and that it's attached potentially to the system, to the other system that's adjacent to us. It's also owned by us, the Rama copper gold porphyry. Pre-COVID, I was in talks with Freeport and whatnot, who thought that it was part of one, and they just wanted, anyway, that fell apart. So yeah, they think it is epithermal, but the whole thing is possibly one big system. Don't know. We're
Okay,
about to drill it.
So who within the company has got direct experience with the deposit type that you think
David,
you've got?
if you can hold that question, just write it down, please. We're going to come back to it. I want to make sure each judge gets a question in first.
Sure.
We will come back to it. Nikki.
Bryce, I'm going to ask you the same question. I'm unclear on your balance sheet. So what's your cash position? You said that you run out of cash at the end of the year, but you'll be financing in October. Did I have that right?
Yeah, so we have approximately, I think it's just under 1.5 million Canadian, not a whole lot, but we're only drilling the one deposit. And we've already prepaid the drillers some money, a huge deposit to get them in, and we bought the drill, yada, yada. So our drilling costs are quite low. The plan is with that is that they are in the country to train some local drillers, so that in future we can just have local drillers. We do not need any more expats because the expense of that is huge. And also because we own the drill, we don't have the logistical issues of rainy season and whatnot. With mob and demob, I've sent from a CCAN Canadian Tire a whole bunch of stuff with garage in a box and whatnot, so we can keep the drill right on site. So anyway, why we would finance in October is because we attend the New Orleans Investment Conference, which our chairman runs, whose name is Brian London. Well, not just chairman, he's my co-founder. He and I co-founded it. So we already have loyal shareholders there. And so we tend to always want to do a financing, whether we need it or not. We always need it though. So never been a question.
Will you have news off the drill bit
We'll
between
come.
now and then?
Sorry, Nikki. We'll come back. Please write that question down. Keep it with you, George. You'll have to unmute, George.
Mute.
Oh, there we go.
Sorry, Bryce. My question is, because this is market purchases and we're going to be looking at $1 million, up to $1 million. If I looked at your stock, I would be buying 10% of the company with $1 million. Did I do something wrong on the market cap?
No, it is a $10 million market cap. So yes, you probably would be.
Okay.
I didn't know. Yeah, that's a lot.
So
you guys are good guys.
Yeah, between the two the Canadian and the US exchange are only trading about 60,000 shares a day. So if somebody like me wants to come in, we're going to blow the thing way up.
It would be
how would you handle that 10 million?
I didn't know that the virtual deal was that you'd have to come into the market. So we'd probably want to
My understandings, that's what it was.
Okay. Well, we'd have to get creative on that, I think.
Okay.
Because it would run it right up to 50 cents. Like there's not going to be a whole lot of sellers. We're most shareholders.
And if I've misunderstood, somebody please correct me.
Oh, yeah. Please correct him.
No, we're good. We're good. All right. I want to come back to Roger had his hand up, and then David, and then Nikki.
I'm going to steal Nikki's question because I'm not sure we'll get back around. Yeah, are you going to have any results from the drill bit between now and raising capital in October?
No, I doubt it, because our drill season, first of all, ends around end of October, November, and so we're going to be going mad with two shifts, hardcore, 7 days a week, and until the rainy season doesn't allow us to continue. But what was the question? Do we need any money?
Will he have any results from the drill bit? I mean,
I doubt it, because
drilling and assays.
Our deal is with ALS in Brisbane, and we can ship it there as we go. We can ship it. But then maybe we do a rush job. I should hope that we would have some results by the New Orleans conference. I definitely aim to do that. I'd be working really hard to get that done.
Let's squeeze one more question in these last 40 seconds. David.
Sure, thanks. So who of your exploration team has the resume that matches the deposit that you're expecting to find?
Okay, that's a great question. So our largest new shareholder who just came in is Australian. So strategically, that's amazing already. But he's serially successful as a mining entrepreneur. And not all of us know him in North America. I met him here on this platform. His name's Ian Gandel. Now he's not a geo himself, but he has built 3 mines that are in various market caps all the way up to 1.7 billion for ASM. And he is lending us or giving us all of his technical guys. So he has 3 geos. Peter left.
All right, Bryce, I'm sorry. I'm going to have to cut you off. Our question period is over. I hope the judges got everything that they need to make a great decision here. If I can have the judges, as well as Bryce, just turn your videos off. We are going to move on to our last presenter. Denis Miville-Deschenes, CEO of Highland Copper.
Hi, Highland Copper is a Canadian-based company. We do have two interesting projects in the States, in Michigan, located in the Upper Peninsula and Old Mining District, where we get good infrastructure to support development and more importantly, strong community support. We're listed on the TSXV and OTC. We currently have 13 million US in cash and do have a strong team and board with skills aligned now around construction and development phase of the projects. We also have good shareholders to support us with Orion Mine Finance, Greenstone Resources, Condire, and Osisko Royalties. Two projects combined for 8.3 billion pounds of copper in the ground. And of that, we have 4.8 billion pounds in the measured and indicated category. Both projects are sedimentary deposits and underground mines. On Copperwood, we did complete the feasibility study and already have received all permits for construction. The processing capacity is set as 2.4 million ton a year, grade of 1.5% copper for roughly 30,000 tons of copper production yearly, mine life of 11 years, with the capacity to increase that substantially as we still have 50 million tons of inferred that were not used in the feasibility study. As for White Pine, it's a bit of a different animal. Past producers, operated for 50 years. PEA level, although de-risked because of the previous production. Processing rate is set at 5.4 million tons a year, average grade 1.05% copper for a production of 40,000 ton a year, roughly, and the mine life of more than 20 years. Path forward, we're really going into the Copperwood development portion of it hard. It would take 24 months for construction, and at that point we would get cash flow coming in and really focus on the actual construction of White Pine at that time. So short-term focus certainly on financing might be challenging as the market right now are, especially for a smaller developer. Or market cap in the last 12 months has been between 60 and 120 million. But certainly, if you want to benefit from the fundamental around copper, if you want good exposure to copper, we feel we are at the right place at the right time and are ready to become a producer in the short term. Alvaro, I think you're on mute. Okay.
I am no longer on mute.
Okay.
Thank you. David, let's start the questions.
Oh, thank you. Denis, thanks very much for that. So you've got Copperwood at DFS stage. Is that the next focus? And is it about financing with debt to equity and getting that into production as quickly as possible?
Yes, it is. The project is ready and permitted. So obviously for us, it's a matter of having access to cash flow as quickly. I say that, but we're also looking at optionality as the two projects are 60 kilometers apart. So we're getting the question, can we do one central processing facility and maximize synergies on the two projects? We have an ongoing study on that will be completed early next year. That doesn't prevent us from pushing hard on the development of the mine and getting ready on that side if the combined scenario is much better. Combined, it's 75,000 tons of copper a year. It does attract a different set of investors also and makes it more challenging for us to be able to finance a larger project like that.
Nikki.
Denis, you've got royalty streaming companies, either as shareholders or representatives on your board. Do you have any streams or royalties on the project today?
Yeah, when the project, Copperwood project was purchased back in 2014, the money to proceed with the purchase was advanced by Osisko Royalties, and they got out of it a royalty of 1.5% copper and access to a silver option agreement.
Thanks.
Excellent. Thank you. George, you might want to turn your camera on as well.
Unfortunately, it's not allowing me to do that.
Okay.
So I'll ask Denis. Hello. I just wanted to find out the two projects. Are they close? What's the distance between them?
60 kilometers or 37 miles or so, enough to have strong synergies and certainly on all of the G&A aspects for both projects, but potentially also if we can have one central processing facility, it would change the game.
That was going to be my question was, is there a hub and spoke type thing available?
At White Pine, we have plenty of room for that. We have 100 million ton of capacity from the previous operation that's still there. So minimal capex up front for tailing storage. And we're currently doing met tests on a one line of processing. Both projects would produce a concentrate similarly clean with low contaminants. So it's certainly interesting for smelters and traders and for us as we proceed with financing.
Okay. Thank you.
Roger.
Yeah, so maybe I missed it, but can you confirm what the capex bill is and how much you need to raise to progress the project? And just also confirm, is the financing the only remaining hurdle to getting a construction decision, or are there any other permits or anything required? And then if I can squeeze one in, just what NPV would that generate on your sort of current technical study?
Yeah, look, on Copperwood feasibility study, the one completed in 2018, capex was pretty low capital intensity at 275 million. White Pine PEA was calling for 500 million, and those two numbers are not including the commissioning revenues. Commissioning revenues. So combine 750 million for 75,000 ton of copper. We always felt it was on the low side and accessible for us, in particular for Copperwood. There's interest from the banks. We had run on the net side back a couple of years ago. So we still feel we could get up to 60% on the debt. Equity challenging, it's been for a number of years, for sure. But yes, at this point, we're on Copperwood, we're ready for construction. White Pine, it would likely take the 2 years that we need for Copperwood construction to be ready to take that decision.
Excellent. We have 3 minutes left to open the floor up. You can raise your physical hand. Let me know. Nikki, go ahead. You're fast.
Raising my physical hand. Maybe you could just talk through what you think are the biggest technical challenges. So it sounds like the concentrate on the processing side, you've got a clean con that I'm assuming is saleable. What about the mining? It's fairly narrow zones of mineralization, if I recall correctly, and quite deep. So if you could just walk through what are the biggest challenges, both from a capex perspective and once you're up and running.
Look, I'd say the biggest challenges as we see them right now are not necessarily mine related or processing related. White Pine operated for many years, so we know the geology is very steady. Technically, ground conditions are great. Processing, we understand the flow sheet. Similarly, on Copperwood, there's a bit more of an unknown. It hasn't been open underground yet, but the focus will be on upfront training program for the workforce and a slower ramping up. A scenario back to back would be likely easier than one larger project in a region where it's not obvious to get the skills in the mining industry right now, and we're really focusing hard on how we can structure a proper training program to develop those two projects. That would likely be the biggest challenge right now.
Thanks.
Obviously,
David.
I can say on the logistic and supply side, we've seen plenty of challenges in the last 2 years, but yeah, I guess that can be planned, but labor will remain the biggest challenge.
Let's squeeze one more question in here, David.
Thanks. So you've got some fairly renowned mining finance providers on your in your shareholder list. Surely you've discussed providing the equity and or the structured finance component coming from them.
Yes,
Orion, for instance.
Yeah, look, last year we raised 26 million. It was all coming from our actual shareholders. They understand where we're at. We've put in place a steering committee they also participate with their technical group. They're willing partners on the path forward, going ahead with the development of the Copperwood project. So we expect them to be there for their share of the equity. And a larger player like Orion Mine Finance certainly has interest in providing the debt, and but they don't have the right to. They have an opportunity to. So it's a bit of a difference there.
Thank you.
And that brings us to the conclusion of the question periods. So what we're going to do now is we're going to, let me reset that timer. There we go. We're now going to leave the judges to ponder for a few minutes where they'd allocate their funds. We'll come back and ask them in a second. In the meantime, I haven't introduced myself. So I'm Alvaro Peralta. I'm with MiningIR.com, a media company for exploration and small producing mining companies. You can always find us at any of the shows. Mines and Money will be there in person coming up November, December. We're so excited for that. So, and we're looking forward to seeing all of you there as well. I'm going to ask Laurel and Bryce to also turn their cameras on so that they can join us. And by looking at the judges here, I think we're ready to go. I want to preface, it's always a challenge to pitch. It's always a challenge to pitch to institutional and private investors. And congratulations to all three of you for putting yourselves forward and sharing so much about your companies with us. So I am going to start with George. You'll need to unmute. If I can have all the judges unmute, that'd be great. Where would you allocate your funds?
I would split it between two, and I'll explain why. So I would go with Perpetua for 500 and for Highland for 500. And my main reasoning is that the shareholders behind those companies are healed enough to make them go into production. And my focus is on projects that go into production.
Thank you. Nikki.
My challenge is actually all three companies are both facing funding shortfalls, and we know what occurs with share prices in the near term as companies face funding, and particularly in markets that we've experienced over the last recent months. They haven't been friendly to any company that needs to finance. And so I would make a decision of, I don't know if I can even do this, of not investing today. I think, again, it's very difficult to pitch. And I think all three companies obviously did that well in a challenging environment. But the problem is I don't see an alpha event as to own any of the three companies today. And I would sit back and wait for that funding gap to be bridged and then make a decision post that.
Thank you. Thank you for that. David.
Thanks, Alvaro. I think for me, the company with the clearest path to the next catalyst is Highland Copper. I think that is that's probably the closest to get to the next major re-rate. And so ultimately, I'll be going all in on Highland Copper.
Thank you. And Roger, finish us off here.
Yeah, I think I'd echo Nikki's thoughts, which is, to buy in the market today with fundraising requirements coming up would seem, challenging, especially with, the likelihood that $1 million would move the market quite considerably. So, I'd be waiting for the next capital raises. The one I would probably put the majority of my cash into is Highland Copper as well, because again, it's closest to production. And yeah, I think the shareholder register also backs up the potential to get into production. So I'd probably say 3/4 of my cash is going there, and then the remaining sort of 1/8 each would go to the other two. I mean, I do like sort of discovery potential, so Thunderstruck certainly has that. But it's mainly the sort of the cash requirements that all three are facing that would create the challenge for me.
Thank you, Roger. Certainly speaks to the challenging times we're in right now with the markets the way they are, and it'll be interesting to see the busyness that comes in at Minds and Money in November, December, as we get together in person and all these companies vie for those investing dollars. I want to thank Laurel Sayer, Bryce Bradley, Denis Miville-Deschenes for presenting today. I want to thank our judges, George Petker of Capital for Mining, Versatech Capital for Mining, Roger Bell, Director of Mining Research, Hannam Partners, David Bellingham, Managing Director of HCF International Advisors, and Nicole Adshead-Bell, Director of Cupel Advisory, for being our judges today, showing our audience what it takes to make some of these really challenging decisions in this kind of market environment. I'm Alvaro Peralta of MiningIR, and I want to finish off by announcing the winner, Denis Miville-Deschenes, Chief Executive Officer of Highland Copper. It looks like you walked away with the majority of the funds. You are today's pitch battle winner. With that, we're going to wrap up this session. Thank you so much for attending, and we look forward to seeing you in person at Minds and Money London. Bye for now.